And in our top business story, GCC regulators need to create laws which are as globally harmonized as possible and to invest time and money into educating traders in order to solve current market issues. That's according to industry experts at the second GCC Financial Markets and Treasury Conference. Held under the patronage of His Highness Sheikh Hamdan bin Rashid Al Maktoum, Deputy Ruler of Dubai and the UAE Minister of Finance. The conference, which opened today in Dubai, will run until the 22nd of January under the theme, The New Oil Order. With the latest slide in oil prices blamed on the lifting of sanctions in Iran, global economic experts are analyzing prospects for the remainder of 2016 as markets look for signs of an economic revival. The conference focuses on the direct impact of the new oil order on GCC countries and the anticipated economic implications of the rise of fiscal deficit in the region. According to speakers, a lack of harmonization in rules and regulations continues to be a major cause for concern among market participants, and that harmonized regulations as well as trader education and awareness are the key to solving the current market issues.
We are actually expecting the oil prices to go further down, but it's not going to continue at that. It's going to rebound from this lower level, and we are going to expect the $40 to $50 average for this year. So the overall view it is to go up, and the budgets which has been set for most of this country, I assume it's more likely to be around 50s, and so there should not be a tremendous pressure on these sectors and in the GCC. And many of these countries has also seen or prepared themselves for this situation, where actually they looking to diversify to all other sectors to keep the pressure very lower in future in case of the decrease in the prices.
The Central Bank of the UAE announced that the money supply aggregate, or M1, decreased by 0.1% from 457.3 billion dirhams at the end of November to 457.0 billion dirhams at the end of December 2015. However, the money supply aggregate M2 increased by 1.8%, rising to 1,204.4 billion dirhams at the end of December 2015. Similarly, money supply aggregate M3 also increased by 0.9%. The decrease in M1 was attributed to a decrease of 0.4 billion dirhams in currency in circulation outside banks. The increase in M2 was largely attributed to an increase of 21.8 billion dirhams in quasi-monetary deposits, which supported an increase in M3 despite a decrease of 9.8 billion dirhams in government deposits. Gross bank assets, including bankers' acceptances, increased by 1.2% to 2,474.4 billion dirhams at the end of December 2015. Middle Eastern investment banking fees reached $636.4 million during 2015, 16% less than the value recorded in 2014, and the lowest annual period for investment banking fees in the region since 2012. The estimates were part of a report released by Thomson Reuters, which also stated that the value of announced M&A transactions with any Middle Eastern involvement reached $56.2 billion during 2015, which is 13% more than the value registered during the same period in 2014, and marking the best annual period since 2008. Middle Eastern equity and equity-related issuance totaled $5.7 billion during 2015, a 50% decline from 2014, and the slowest annual period for equity capital markets issuance in the region in 2 years. Middle Eastern debt issuance also reached $6.2 billion during the fourth quarter of 2015, a significant increase compared to the value raised during the previous quarter. M&A fees accounted for 33% of the overall Middle Eastern investment banking fee pool, the highest annual share since fee records began in 2000. Nakheel confirmed today that residents at Jumeirah Village Circle in Dubai can look forward to easier access to the community via 3 new JVC Hessa Street link roads that will open later this year. According to Nakheel officials, the company have awarded a contract for 18.5 million dirhams to construct the new JVC access points, which will improve traffic flow and reduce journey times at one of Dubai's largest and fastest growing communities. Work will begin in February with anticipated completion in Q3 2016. A Nakheel spokesman said around 20,000 people currently live in JVC, but this rapidly growing mixed-use development will accommodate some 300,000 people when complete. The new road links will enhance JVC in both the short and long term by tackling the immediate needs of residents and addressing the future needs of the community as it expands. Nakheel has delivered more than 700 villas at JVC with over 265 buildings, villas and townhouses by third-party developers either complete or under construction. A further 239 residential, commercial and hospitality buildings by sub-developers are currently in design stage. Jumeirah Village Circle also features 33 landscape parks spanning more than 4 million square feet.